One of the absolute hardest things that you can master as a trader is knowing when to avoid the slow or choppy conditions. Now, in this video, I'm going to give you a very simple trick that you can find those days ahead of time by using just the daily chart. Now, let's cut all suspense. We're going to jump right into the charts, and I'm going to show you exactly what I start looking for. Now, when we get to the daily chart, we're going to look at one very simple concept, and that is the idea of an inside bar. Now, you might be asking, what is an inside bar? And well, to keep it short and sweet, it means that there are two candles where the one previous is larger than the one that you're currently on or that has just closed. Now, this inside bar is a good indication of a potential consolidation day. Where do these typically happen? Well, to keep it simple, they happen at swing points more often than not. So what we had seen in recent trading all through last week, we had seen a massive rally in price. This led me to believe that once we reached all-time highs, we would potentially start to consolidate. Now, when you can see this Thursday session right here, we went into the following week and gapped slightly down. This gap lower into the previous day range led me to believe that there would be a slower open. Now, what I like to typically do when we're experiencing those types of days is to simply sit on the sidelines. So we open, you see Monday, slow, slow, slow. We had some news hit, and that's what drove price down to that prior day low. But other than that, the majority of the trading happened within the prior day range. I would still consider this an inside day outside of some volatility that occurred from Trump speaking or actually referring to North Korea in some sort of formal statement. Now, the following day, going into Tuesday, is a pure inside day. This is a day where I do not want to trade. And if I do decide to trade, it means that I'm highly just picky about the setups I take. I'm going to be highly selective. I'm going to be focusing on either a really key level on maybe a 15-minute chart or just having very small base hit targets. Now, when you have the inside day that formed, we're really kind of operating under the impression there was more or less two inside days. Outside of this wick blow, it's essentially two outside or inside days. Coming into today, we're looking for the directional break, and we trade that. We could have traded the break of this high up to potentially right here, right? That would be the target. And you can see that we actually did hit that off the open. Now, this was not just smooth sailing. There was a harsh rejection, but what it did was actually give us a really clean trade opportunity in the later afternoon. As you can see right here, we consolidated for many, many, many hours, right? All the way from 10 to about 2. We consolidated. Then we got the directional move. Now, how could you have traded this? Well, I'll tell you how I traded this. I didn't take the entry here. I wasn't watching it at the open. However, when I saw us start to put in these higher lows right here, I went ahead and looked for a long back to essentially the 930 open. My initial target was 6,300, but the way that price was moving at the time, I said, let me just go ahead and take off into the 930 open. So I caught about 5 points from prior day high to the 930 open with 2 ES contracts, made about $500. My risk was essentially below here as it consolidated longer. I added 1 contract. So I was able to make the same initial target goal of 6,300 with taking a smaller target because of that extra contract where then I tightened the stop. So that was how I approached this day. And you might be asking, okay, well, how does this work in the long term? Well, you could look at something very simple on TradingView. You can look up some sort of inside bar indicator, and there's a million different free ones. You can find your favorite one, and you can leave in the comments, tell me what it is, who it's by, and why you like it. And if you're enjoying this video up to this point, leave a like for your boy, but let's continue and show you exactly what we're looking at when we see these inside bars. Now, more often than not, when we go ahead and zoom in on this chart, pick a random inside bar. So you get an inside bar and you get the break above, right? You see the inside bar and you get the break above. Typically, the direction that it breaks, it will close that same direction. So this helps you understand a directional bias for the day. Even if it does pull back, you will see that it's not every single time, but more than half of the time. I went ahead and I looked it up for the last year or so, last 2 years, if you will. It's about 60 to 75% likelihood that it closes in the direction that it breaks. That tells you can likely look to trade bullish setups when it trades above and look for it to continue that way. but it's not an everyday type of thing. So as you can see right here, you get a double inside day where then it breaks above and closes above, inside day right here where it breaks above, closes above, and you can see that again right here, breaks above, closes above. These candles are indicated slightly different than my normal candles because they are color coded for the directional close that they have, and also if they're an inside bar. So my candles are blue, black, but the inside bars are red, green. That's how that kind of works. So it's not every single time that it works in that way, but an inside day break is a very reliable trade that can help you wait longer. The reason I'm not ready to take a trade first thing at the open of the week on that 9:30 New York Open, it's simple. I don't have context at that point. We've seen in recent trading a massive rally into these highs where then we start to consolidate. Anybody who's traded for any amount of time understands that there are phases to price delivery. Whether you're looking at Wyckoff with your accumulation, markup, distribution, markdown, accumulation again, these phases, or if you think expansion, contraction, expansion, reversal, these are different phases within the ICT realm. Or you can keep it simple and refer to it as Larry Williams would have in his prime. He talks about big ranges to small ranges. Simple. You can think about it as phases of growth and rest, night and day. There's a very cyclical nature to price. This is seen on all time frames. So I always encourage you to start to zoom out in charts. When you see that price makes a massive move up, it shouldn't be surprising that we start to go sideways. Shouldn't be surprising that we start to go down, maybe go sideways again, then maybe go up. So the question is, where are we getting into at this point in time? On the weekly chart, maybe we do start to see some more sideways action. We've been pretty up since April. That's exactly where we were thinking the low would happen for the year. If you guys were around since then, you'll remember that we actually did call this and we did trade it in the long-term portfolio back to all-time highs. So again, these are just some of the ways that I can utilize location and price to avoid some of the choppier conditions. So if you enjoy this type of content, be sure to leave a like. If you're new to futures, you're learning, trying to figure out the way, the path, join my free Discord. I will show you how we do it. And stick around, catch a live stream or two. Until next time, take care. Check out Top One Futures for all your funding needs. Description down below.